For today's Business Brief, we're joined by John Kehoe from the Australian Financial Review. John, rate cut yesterday and a fight now between the Treasurer and RBA Governor with some of the banks in terms of passing it on in full.
Yes, obviously the RBA cut rates yesterday to that record low 1.25%. I was a little surprised that two of the banks, ANZ and Westpac, didn't pass it on in full because, as the RBA Governor pointed out last night in a speech, bank funding costs have fallen since they peaked in 2017, and the banks did ratchet up rates independent of the RBA a little bit when their funding costs rose from international wholesale markets. And now those costs have fallen, the RBA Governor says, more than enough to be able to fully pass on these rate cuts. So I think it's a little bit of profiteering by ANZ and Westpac. Their profit margins are under pressure, the bank's profits generally across the board, and I think that's probably reflected in them trying to just pocket a little bit of this interest rate cut themselves.
It's interesting, isn't it, John, because the RBA doesn't have that many levers available to it. It's flagged that it might cut interest rates, might most certainly do that towards the end of the year and into next year. So if the banks don't pass this on in full, they haven't done it this time, they might not do it next time, it's not really going to have a huge impact, is it?
Well, I think you're still getting the full pass-through in the first cut from Commonwealth Bank and National Australia Bank, so that'll have the full impact. If I was a betting man, and I do like the occasional flutter, I reckon probably what you'll see next time is that maybe Commonwealth Bank and NAB don't do the full pass-through, and ANZ and Westpac may. They tend to take turns, the banks, in this, and they all tend to hover around the same variable mortgage interest rate. So it wouldn't surprise me if they just reverse it next time. But look, in terms of the impact on the economy, obviously it would be better if everyone was passing it through in full. But if the majority or the vast majority of it's being passed through, it will have a positive economic impact. But again, only at the margin. The RBA really wants to get inflation up, and it sees it can do that by getting unemployment lower to create a bit of wage pressure in the economy. But this is very much at the margin, and I wouldn't expect to see a huge stimulus impact overnight.
And one of the uncertainties right now is the ongoing trade war between Washington and Beijing, and a bit of a subtle swipe from the Prime Minister, Donald Trump, overnight.
Yeah, interesting speech in London by Scott Morrison, basically saying we shouldn't view these things as just a transactional basis. And obviously Donald Trump is known to be a very transactional politician in his trade negotiations with China and other countries. He also said, Scott Morrison, that it's a bit of a risk to look at these things as a zero-sum game because basically there are other sort of consequences outside the direct impact between US and China. So it was a pretty veiled swipe at Donald Trump, you've got to say it. And good on the Prime Minister for standing up. He's basically telling the United States and China, we've got to work through the international system, the World Trade Organization. He has shown some sympathy towards some of the complaints that Donald Trump has made about intellectual property theft and these sort of things, IP transfers, forced technology transfers as well. So, look, he understands the issues that Donald Trump is trying to fix with China, but at the same time, he doesn't want this tariff war to escalate because, as the RBA Governor again warned last night, he's now talking about trade disputes rather than trade tensions. So it is a risk for the world economy and obviously Australia's economy as well, given that the US and China are our two biggest trading partners.
And just quickly, John, what should we expect from the national accounts today?
Yeah, look, it's going to be a fairly weak GDP number today. My colleague Matthew Cranston has been reporting it's probably going to be the lowest annual rate of growth since 2009. That's just after the global financial crisis. So could be around about 1.8% annual growth, or about, for the quarter, maybe about sort of 0.5 or so percent. So not a great number. But having said that, look, the RBA Governor yesterday said, we're not cutting rates because the economy is going really bad. It's because we want to get inflation up. And I think there's risks out there, obviously, from the trade war and the slowdown in consumption because of falling house prices. But I don't think at this stage we should get too doom and gloom about it because unemployment is still relatively low.
John Kehoe from the AFR, thanks.